Welcome to Market Rush Trading. Today we are going to go over IPO, Initial Public Offering. Although uncertainty remains, a demand for forthcoming IPOs obviously emerges. As the US economy starts to rebound and gains momentum in the second half of the year, investors like yourself and myself should hold an eye on the 6 of the biggest IPOs to come, in our opinion. Although the precise timing of these companies going public remains in question, the following 6 firms have publicly announced they will go public in reasonable business conditions. Always remember, the primary aim for an IPO is to boost a business capital. The business gets access to funding from the entire average investor. IPOs can provide a company with reduced equity as well as debt capital costs. Now let's go over the first one, Robinhood. That is a financial service company that offers a mobile app to invest with a market value of $11.2 billion. Palantir, an American software company that specializes in big data analytics, market value at $20 billion. Snowflake, a cloud-based data warehousing startup, market value at $20 billion. Airbnb, an online marketplace for people to rent, a market value of $20 billion. Instacart, which operates a grocery delivery and pickup service at $2.2 billion market value. Last but not least, we have DoorDash, an on-demand prepared food delivery services with a market value at $16 billion.
IPO summarized by Market Rush Trading. The initial public offering process allows private companies to go public and be owned by larger numbers of investors in the stock market and secondary market. Those of us who trade options fall into that category. The 5 steps of the IPO process are as following. Select underwriter, due diligence and filing, pricing, stabilization, and transition. When a company chooses a bank for the underwriting process, they choose based on these criteria: reputation, quality of research, industry expertise and experience in that sector, distribution and the ability to sell the deal to investors and salespeople, and history with the bank. Step 2, due diligence and regulatory filing. This step is about how a company agrees to be sold. The underwriter serves as the middleman between the issuing company and the buying public. The types of agreements are firm commitment, when a bank buys all of the offer and sells the shares. Next is best effort agreement, when a bank doesn't guarantee pricing nor take any risk. They just do their best to sell the shares on the company's behalf. And third, syndicates of underwriters, when multiple underwriters work together to sell the deal across several banks. There are a lot of documents that need to be filed during this process. The engagement letter, underwriting agreement, registration statements, prospectus, and other legal documents. Step 3, pricing. Let's look at the real price of an IPO. The investment bankers will seek to sell the offer to the best of their abilities at a given amount. In the final result, it's up to the buyers or investors to determine how much it's actually worth. IPOs are underpriced to help stocks perform when they begin trading on the public market. Usually, if you pay attention, IPOs increase their values within the first 2 days of trading. Step 4, stabilization. Upon establishment of the shares in the market, the banks must work together to stabilize the securities or stock price. If there aren't enough investors, banks will step in to purchase them. But this will only last within a limited time period because of the capital required for continuation. And the final step, transition to market competition. The company transforms into an atmosphere of fair competitiveness in the industry where the SEC mandated quiet time has ended. Now, the stock is dependent on news and financial reports to stimulate share efficiency. Investment banks will continue to be the company's consultant to further raise share price over time.
Thank you for watching. I hope you enjoyed and learned a lot from the video. Go ahead and smash that like and subscription button and follow us on social media for more content. And stay tuned for the next video.